Okay, let's jump right in. $200,000 lost in value, 11% wiped out in just 12 months. And listen, this isn't some far-off prediction. This is actually happening right now in 2025. America's housing markets, the ones that were absolutely red hot, well, they're turning ice cold. We're seeing it in places like Miami, Phoenix, Boise. Home values are, well, they're shifting much faster than many people expected. So today we're doing a deep dive. We're looking at the sources to really unpack what's driving this rapid change, why does it matter, and crucially, what's the data telling us about these shifts? We'll focus particularly on Austin, Texas as a kind of case study.
Yeah, and the broader signs are definitely there. Those market indicators are flashing. We're seeing more investor-owned homes hitting the market, quite a few actually, and mortgage defaults, they're ticking upwards. Some reports are even showing like 1 in 3 listings in certain zip codes have already slashed their asking prices.
Yeah, 1 in 3.
It's significant. And the financial pressure, it's mounting for a lot of people. Incomes just aren't keeping up. But insurance costs, property taxes, mortgage payments, they're all skyrocketing.
Right.
So the net effect, well, buyers are pulling back. Sellers are starting to feel, panicked. And these bubbles, these superheated markets, they seem to be popping one by one. Austin's, like you said, is a really potent example of all this playing out.
Austin, yeah, it really became the poster child, didn't it, for that whole pandemic migration boom. Tell us about the kind of growth its housing market saw back then. It was pretty remarkable from what I understand.
Oh, remarkable's putting it mildly. Austin's boom was, well, exceptional. Between 2020 and 2022, home values there just shot up over 60% increase. The median home price, it peaked at a, frankly, eye-watering $590,000.
$590,000 median, that's huge.
That's an incredibly fast climb, unlike anything most locals had ever seen before.
Okay, so that's the peak. Astonishing. But what happened next? What are the sources telling us about Austin's market trajectory by, say, mid-2025? Sounds like a complete 180.
You're absolutely right. A complete turnaround. By mid-2025, Austin's market had undergone a pretty significant shift. Prices are falling, and falling fast. We're talking nearly 9% down year over year. And inventory, the number of homes for sale, it's more than doubled since just last summer.
Doubled?
Yeah. So what was described as this frantic seller's market, total frenzy, it's now very quickly moved into what the data suggests is, a slow-moving correction zone.
A shift that big, that fast.
Yeah.
It usually isn't down to just one thing. I mean, everyone points to interest rates rising, obviously. But is that really the whole story here? Or are there, deeper things happening that are driving this change specifically in Austin?
That's a really good question. And you're right to push beyond just the interest rates. They're a factor, absolutely no denying that. But the story in Austin, it's got more layers. The city's tech economy, that was the engine, right? That fueled the boom. It brought in all those high-paying jobs that seemed to justify those crazy price increases. But the recent layoffs, Meta, Amazon, Tesla, those have really shaken buyer confidence, understandably. And those specific high-paying jobs that kind of propped up the market, they're thinning out.
Okay, so the job engine sputtered a bit.
Exactly. And at the same time, the overall cost of living in Austin just kept climbing. It reached a point where it's become unsustainable for a lot of locals. I mean, think about it. The median household income is around $78,000. Now, try to afford a $3,400 monthly mortgage payment.
Which is based on what, a 7% rate on that median priced home?
Precisely. Even for a dual income family, that's a massive stretch. The math doesn't work for many people anymore. We even saw quotes in some sources, like someone named Sarah T. moved there in 21. Said something like, "We bought at the peak, thought we were getting in early, now it feels like the floor just dropped out."
Yeah, you can imagine that feeling.
And then you have to consider the investors. They played a huge role in the run-up. In some Austin neighborhoods, they made up, 25, maybe even 30% of all the buyers?
A huge chunk.
A huge chunk. And now they're pulling out, actively selling off properties. Plus, you've got this wave of short-term rentals, Airbnbs, being dumped onto the long-term rental market because the profits aren't there anymore. So rent growth has basically stalled. Some landlords are actually cutting prices just to get tenants in and avoid empty units.
Okay, so putting all these pieces together, the tech slowdown, the cost of living, the investor exit, the rental market shift, what's the sort of fundamental diagnosis here for Austin's market? It sounds like way more than just a simple reaction to higher interest rates.
Exactly right. It's fundamentally about a market that got overextended. It grew too fast, way too fast, for its own underlying economic reality. The fundamentals, like local wages, just couldn't support those price levels long term. And the results are pretty clear now. Unsold homes are sitting there, longer and longer. Bidding wars. Almost unheard of now. Price reductions are happening everywhere, almost every zip code.
To the bubble?
The housing bubble in Austin, yeah, deflating rapidly.
Let's dig into those numbers a bit more just to really paint the picture.
Right.
What specific data points really illustrate this change in inventory and, the overall market feel?
Absolutely. The numbers really tell this story. Let's look at Austin as of, say, July 2025. Okay, months of inventory, or MOI. That currently stands at 6.33 months.
6.33 months. And what does that mean practically?
Well, that number puts Austin's market squarely into what analysts call a neutral to buyer's market category. So shifting away from sellers having all the power. Now, for some context, let's think about the extremes. The highest MOI Austin ever saw, meaning the slowest market, was 8.7 months back in July 2010. Deep buyer's market territory then. But the lowest, during that crazy peak we talked about, March 2021, was just 0.6 months, less than 3 weeks of inventory.
Wow, zero point 0.6 to 6.33. That's a dramatic swing.
It's huge. Now look at active listings, the actual number of homes for sale. Right now it's 17,778. Compare that again. The historically peak number of listings was 14,326, also back in July 2010. And the historical low, again, March 2021, only 2,497 homes on the market in the entire area.
So way more houses for sale now than even during the last big downturn.
More active listings, yes, and significantly more inventory relative to sales pace. And just to clarify those categories for you listening, a seller's market is typically under 5 months of inventory. Home selling fast, maybe under 147 days. Neutral market is 5 to 7 months, so around 250 to 207 days on market. And a buyer's market, that's over 7 months of inventory. Homes are sitting, often 210 days or more. Austin's right on that cusp, moving towards favoring buyers.
Okay, so connecting these numbers, the inventory jump, the price drops with all those factors we discussed. What are the really critical takeaways here for someone, maybe you, looking at the housing market, whether it's Austin specifically or just trying to understand the broader trends?
Well, for Austin right now, it's pretty clearly shifted to a buyer's market, or at least neutral leaning that way. But there's a big but. You'd probably want to be patient, willing to wait and see if prices have further to fall before jumping in. The sources seem to agree that unless something big changes, like a sudden massive surge in tech hiring, which seems unlikely right now, or a dramatic drop in interest rates, Austin could be looking at a pretty extended cool-down period for its housing market.
So the Austin story isn't just about cycles, it's about something more fundamental.
I think so. What Austin's rapid deflation really highlights, I think, is the vulnerability of markets that were built on, well, maybe unrealistic assumptions of endless growth, especially when that growth was so tightly linked to one specific industry, like tech. It kind of reveals this dangerous gap that can open up between perceived value, those sky-high prices, and the reality of local wages and affordability. That's a powerful lesson, really, for any city that might be banking heavily on just one economic engine.
This whole deep dive into Austin, it really drives home how fast things can change, doesn't it? From red hot to ice cold. And it really underscores how important it is to look past the headlines, past just the interest rate talk, and dig into the actual data, the underlying economic drivers.
Absolutely. That's the crucial insight, I think. You have to understand how all these factors play together. The local job market, the real cost of living for people there, what investors are doing. All of that gives you a much richer, much more accurate picture of a housing market's real health. It's not just about interest rates. It encourages you, the listener, to think more critically about what truly underpins housing value in the long run.
So the final thought maybe for you to consider is this. Austin shows us vividly that even the markets that seem the absolute hottest aren't immune. Not when the specific things driving that heat, whether it's a booming industry or a flood of investor cash, start to falter. So the real question becomes, how solid is the story, the fundamental story, behind the housing values where you live or where you might be looking, especially when those easy money conditions fade away? Something to chew on as you look beyond the headlines.